this market is literally collapsing. The rig paper market is collapsing, and we have unlimited demand, if you want to put it that way, for gold and silver bars relative to what is available. And the reason I say that is that we've got a global debt market of $200 trillion now that's been grown to a horrific level while they shut down the gold warning system. I do think that the time is coming, Sean, where you can buy a house for maybe 2, 3, 4, 5 ounces of gold, because all of these paper assets around us are burning down.
Hey friends, for those of you who still don't understand why silver is going many multiples higher in price than where it's at today, we lay it all out for you in specific detail. And in this one, we need to go back a decade just to set the stage. Everything you're about to hear in this interview is 100% fact, and those that listen to this information will benefit from it. Before we begin this extremely critical interview with David Jensen, just a quick word from this interview sponsor. Y'all know silver and gold is the place to be, but maybe Bitcoin is too. And for those of you that follow the cryptos, if you haven't gotten involved yet, it's not too late. Most leading commentators believe that Bitcoin has just started its climb. Crypto pioneer Adam Back actually thinks it will soar to $300,000 in the next 5 years. Even if it does just 10% of that, that's $30,000 Bitcoin. So give Noble Bitcoin a call and talk to their crypto experts about moving your IRA or 401k over to cryptos. You'll get tax breaks and peace of mind for starters. Visit noblebitcoin.com or call Noble Gold today at 877-646-5347 and get the ball rolling. That's noblebitcoin.com. And welcome back, friends. Thank you so very much for tuning in. Hey guys, for those who missed my last interview with Bill Holter, YouTube is stomping on it very hard. They don't want people learning the truth about the US dollar in gold and silver. The analytics have never been more clear. They are clearly shadow banning my stuff. So I'll link it below for those who are interested. Guys, I have back on the line the one, the only David Jensen. You can find him on Twitter at @RealDavidJensen. Great researcher and writer. David, welcome back.
Thank you, Sean. Great to be back with you.
Great to have you, my friend. I'm going to read this quote, and then I'm going to turn it back to you. This is from Peter Schiff. People don't understand the significance of $2,000 gold. The fire may have begun with the dollar, but it's going to spread to the financial markets and the entire economy, and people just don't get this. That's Peter Schiff.
Yeah, it all started back in the 1980s, Sean, and this was highly predictable as soon as they created the LBMA in 1987. It was created by the Bank of England, and Evelyn Rothschild pushed Margaret Thatcher hard to form it. And they transformed the world's gold market into a market that had previously traded bullion into one that was trading promissory notes. And the reason they did that was in 1980, gold had run to $8.50 an ounce from around $40 an ounce a decade earlier. And they had to raise interest rates to 19%, so 9% above the rate of inflation, to get people out of gold and back into bonds. And so they essentially put the gold metric, which is the world's warning system of when we have monetary inflation, they put it to sleep. And because we have a debt-based money system, we have now run up the biggest debt bubble in history, and gold did not warn us along the way. So now we have the highly predictable collapse of the global debt bubble. And it's not just the US dollar, it is every fiat currency, every debt unit of currency that is out there. That is now on fire. And I think people didn't realize it when the government shutdown happened, but just like that detonation in Beirut this week of that ammonium nitrate that wrecked half the city, that's the equivalent of what's happened to the bond market with the government shutdown, terminating the debt bubble globally here.
Yeah, absolutely. Let me show the audience this. I know you're in your car. I don't know if you can see this, but I'm going to show the silver chart from Friday. This is
Yep.
what they
Yep.
tried to do to silver on Friday, guys. They tried to hammer it. They hammered gold, but this is a very interesting chart to me, David, because it looks like the silver market is in such a bull run that they cannot keep it down. Look at that. It looks like a double bottom at $27.40, and it climbed back and pared its losses on Friday. I think it was only down 80 cents maybe. At one point in the day it was down, I think, $1.50 or more. It's quite a story. Silver, you know who got it right about silver this year? The guy from Guggenheim Investments. He called silver the number
Oh yeah,
one
the fund
play.
manager. Yeah.
You remember that soundbite? The number one play for 2020? Silver.
Where do you put your money? What's the number one conviction trade right now for you, 2020?
Silver.
Silver.
Silver. Yeah.
It's been quite a run.
Yeah, the chart. I mean, the chart is the trading of these unallocated contracts, and you know the bottom line is that globally we've got a bar shortage, and so of silver and of gold, and so you know they can stand on their heads in that digital pricing market, but it's not going to change the reality of the tremendous squeeze and the run on silver that we have right now.
The world is waking up, and the smart money wants physical. You reminded me via email of this soundbite from Adrian Douglas, God rest his soul, at a CFTC hearing in 2010, explaining what David Jensen just told you and what I just discussed recently with Chris Duane and Bill Holter.
I'd just like to make a comment about, we're talking about the futures market, hedging the physical market, but if you look at the physical market, the LBMA, it trades 20 million ounces of gold per day on a net basis, which is $22 billion. That's $5.4 trillion a year. That's half the size of the US economy. If you take the gross amount, it's about 1.5 times the US economy. That is not trading 100% backed metal. It's a fractional reserve basis. So, you can tell that from the LBMA's website because they trade in unallocated accounts. And if you look at their definition of unallocated account, they say you're an unsecured creditor. Well, if it's unallocated, if you buy 100 tons of gold, even if you don't have the serial numbers, you should have 100 tons of gold. So how can you be an unsecured creditor? Well, it's because it's fractional reserve accounting. I mean, you can't trade that much gold. It doesn't exist in the world. So the people who are hedging these positions on LBMA are essentially, it's paper hedging paper. And Bart Chilton uses the expression, stop the ponzimonium. You know, this is a Ponzi scheme. That because gold is a unique commodity, and people have mentioned this, that it's left in the vault, it's not consumed. That means that most people trust the bullion banks to hold their gold, and they trade it on a ledger entry. So one of the issues we've got to address here is the size of the LBMA and the OTC markets, which are supposedly backing these positions which are hedging, but it's paper backing paper.
Boy, I'll tell you, I wish Adrian Douglas was still alive today so he could see what's actually transpiring, because I couldn't believe it. When I heard this 10 years ago, David, I really thought the whole scheme would unravel in a few years. So did Chris Duane. So did Bill Holter. So probably did you. I can't believe they were able to stitch this scheme together for another decade. Here we are in 2020. And is it now finally unraveling?
Yeah, I think so. I mean, these were really seminal comments by Adrian Douglas and Gata at this hearing. And the reason it's so important was that in a public forum, somebody stood up and what Adrian said was, listen, they're trading 20 million ounces of gold every day in London, and it's unbacked promissory notes. And we know how, you know, promises can ultimately be expanded to the moon, and you can create as many of them as you want and contain the gold price by knocking out the stop losses and cascading the market whenever you want. But what I don't think that Adrian realized was that he triggered the 2011 Loco London Liquidity Survey, and that was a document released by the LBMA, which basically came out and said, oh, you know, we've surveyed our traders in London, and about 64% have responded. And we estimate from their response that in round numbers, about 10 times the number of ounces are traded every day versus the net settled amount that we've been posting. So when they post at the end of the day the trading volume, they had been quietly posting this number, and it reflects the number of buys and sells by each house, and they subtract the two. So if you buy 10 and sell 9, they say you've had one contract of transaction. And what they've revealed was that with roughly 2/3 of their traders responding, that they were saying it was 10 times that much, and it might be much more than 10 times. But so it wasn't 20 million, it was 200 plus million. And the LBMA's numbers indicate that that peaked in June of 2013 at around 300 million ounces of gold every day, or 2.5 times global mine supply, or 3 times annual mine supply. So, I mean, this is the scale of the fraudulent gold and silver markets, platinum and palladium as well, that were created there in the late 1980s. And as I say, it was a complete catastrophe that they did this, because they essentially shut off the warning system. And it's analogous to, let's say that you're running a nuclear power plant and you can only produce 100 units of energy, and you turn the warning systems on, and then you run it wide open and you say, hey, look at this. You know, we're producing 150 or 200 units of energy out of this 100-unit power plant, and the warning systems aren't saying anything. Everything must be good. And you know that that is not the case. And in the end, it collapses. And that's exactly what is happening now, Sean, with our current monetary system and our debt system. And at the same time that this is collapsing, so is the rig on the metals. And it's being shown up by this relentless demand for gold and silver bars, which cannot be met.
You know, I absolutely love going down memory lane with guys like you that I've spoken to for years. Same thing with Chris Duane, Bill Holter. Guys like us have forgotten more probably than most people, than the average person even knows about any of this stuff. You mentioned Evelyn Rothschild's hand in creating the LBMA. Mm. Let's talk about these types of people and banks wanting to get out of this business, because I think even they know the fraud is unsustainable. The Rothschilds, I think, got out of the LBMA in the gold setting business back in the early 2000s. Do you remember that?
Yeah, 2005, I believe. And they had been running the London Gold Fix, great name, by the way, since 1930. So, but I mean, even this week we see that Scotiabank has departed the London Fix, and Citibank has stepped in.
That's exactly where I was going next, Scotiabank. But you continue, and then we'll circle back.
Yeah, see, that's Scotia Mercado, and Mercado has been in this business for 300 years. That's their division, Mercado, that they purchased. And so what you're seeing here is a company with a 300-year history in trading gold that has just said, well, let's split. We're done. And why? Gold is flying. Silver is flying. This is going to be the hottest market for the next decade. Why are they leaving? And I think it's pretty clear that this is going to be an accident scene as much as it's going to be the focal point of the next bull market.
Yeah, and it's worse than an accident scene. It's quite literally a crime scene. And it's funny that you mentioned Scotia Mercado, because that's exactly where I was going next. I just wanted to hear what you'd say about the Rothschilds exiting. Scotia Mercado wants nothing to do with this fixed market anymore, and they're having a hard time getting out of it, by the way. But here's what's interesting. Another whistleblower, like Adrian Douglas, who spoke in front of the CFTC and sounded the warning, and of course CFTC did nothing about all of this rigging, about all of this criminality on the COMEX. Another whistleblower was Harvey Organ. And Harvey Organ told the story about wanting to go see his physical precious metals that were in storage, supposedly, at Scotia Mercado. And they didn't want to let him into the vault. He had to fight for over a month to get access. And when he went in, he was shocked at just how little physical silver was there. I should go back and try to find the soundbite. I mean, it's shocking. I think many of our listeners have more physical silver in their own possession than he saw in that Scotia Mercado vault.
Yeah, so I mean that falls in line with what Andrew McGuire's been saying, that they had requested or received delivery of 130 1,000-ounce bars from JP Morgan in the wholesale market, and not one of the serial numbers had matched the documentation. And so it looks to me like, that JP Morgan is either drop shipping, meaning that they have others shipped to McGuire and they have no idea what bars are being shipped, or they're turning stuff around in their dock immediately, not even bothering to work the documentation. But it's a very odd story. And then also that they're being told that they can get bar delivery of these 1,000-ounce bars. They can get them delivered from in the wholesale market in January if they're paying it for it now. It gives us a sense of just how short the market is for these bars out there, and why I look at the corrections like we see today. I look at them kind of casually because it has no consequence in terms of the fact that the market is unable to meet physical demand, and all they're going to do is cause a bigger problem if they don't let the price run. So it's all heading in the same direction here, is that this market is literally collapsing. The rig paper market is collapsing, and we have unlimited demand, if you want to put it that way, for gold and silver bars relative to what is available. And the reason I say that is that we've got a global debt market of $200 trillion now that's been grown to a horrific level while they shut down the gold warning system. And that the investors that are in that market, you only need 1 or 2% to start moving, or not even that much to start moving into secured precious metals bars, and the inventory is gone. And we're seeing crazy numbers today of 10% premium on silver eagles and things like that. But that, I don't think that's going to be even begin to show the level of demand and the supply demand imbalance that we're going to see when some of these bond funds, pension funds, etc., start to show up and secure the metal.
All right, so that serial number issue with the bars and JP Morgan is very, very interesting. And what's fascinating about that is that we've heard for more than a decade from people like Adrian Douglas about hypothecation and rehypothecation of metals, meaning people believe they have metals in storage at bullion banks, but those metals have been loaned out or promised to others to the degree it's 100 to 1, and I wonder if it's not far worse than 100 to 1. Do you want to explain hypothecation and rehypothecation?
Well, it's the relanding or the selling of the ownership of the asset multiple times, and it goes beyond that, Sean. We've seen the London bullion market, the volume, the trading volume has collapsed. It was around 300 million ounces of gold a day. And in both the silver and the gold markets, that trading volume has dropped by more than 90% since 2013. And what it's showing is that the traders, the bullion banks in particular, have basically lost their primary tool of price containment, which is selling non-existent metal or rehypothecated metal, where you promise it many times to different people. And so it may not, it isn't just the SLV owners perhaps, or various fund owners that don't have the metal that they think they have. It's the individuals who hold the spot contracts from the London gold market and silver market, these unallocated spot contracts. And a spot contract is immediate ownership. The standard has historically been 2 days for delivery. And there are many, many times, and this has been stated many times previously, and I want to re-emphasize it, is that there are many, many times the number of believed owners of this metal out there for every single bar in existence. So you're going to have many claims, and it's believed to be in the order of hundreds of claims per bar that's available into the market right now. And this is what is shaking out, I believe, and this is why I believe that the bullion banks are departing this market as quickly as they can, because I think it's pretty clear the roof is on fire, and who wants to hang around for the ultimate consequence to be seen.
All right, let me ask you this about the COMEX and the silver price. For silver to have moved from, at the bottom after the COVID meltdown, it went down to as low as, I think, 11 or 13. Anyway, today as we're having this conversation just a few months later, it's 28 and change. Now, many people that I listen to and trust, people I know, people you know, people I've interviewed like Mike Maloney, we all talk about the COMEX manipulation. And in some cases, 1 billion or more ounces of paper silver via COMEX contracts are traded in a single day. Now here's my question. Do you think that they have lost control of the COMEX? What do you think is going on? How are we suddenly sitting at $28, $29 silver when they've successfully manipulated it and fixed the price for the last decade?
Well, the critical market is the spot market. So the COMEX trades futures. So you get you trade a futures contract and you get future delivery. The critical trading, I mean, it's been important to rig the futures market as well, but the critical market has been the spot market in London. Now, having said that, they are still trading very high volumes in New York, and the crucial issue is, are they able to deliver into this market for those who stand for delivery? And I'll tell you that in March, the London market essentially several times went no offer. So they had gone from trading 300 million ounces in 2013 to having several instances where the market in London locked up in the spot market. And so what you basically saw was a fleeing of gold and silver buyers from that market. A good percentage of the traders in New York who were standing for delivery had come from the London market and had taken the near future contract and had stood for delivery that way. That's why all of a sudden we saw this huge surge in delivery show up in New York. It was both investors concerned about the financial crisis as well as the people coming from overseas into New York. And it's interesting, Sean, that if you look at the import-export statistics for the U.S., that well over 95% of this gold that was delivered in the COMEX came from Switzerland. And Switzerland, we don't know exactly where it came from in Switzerland, but that is the location of the Bank for International Settlements, which to me has been at the center along with the Bank of England, of this rigging story ever since it was started. Now, the key here is that the BIS in Switzerland, they've got gold from all their participatory central banks, but they don't have silver. And I think that this is where we're basically seeing a rapid repricing in the silver market. The bullion banks are unable to pound this market and subdue the price with paper anymore, because they know that they're going to get demands for delivery. So you're still seeing volume, but a lot of it is, I think, just traded back and forth between the same hands. And there's very, very careful positioning by these banks to make sure that they're not getting called out for delivery in that market. But I think it's beyond the ability to control any of it right now. So we're in the end days of digital pricing, and I do think that what most observers of this market, Sean, are missing is the rapidity. I did some posts at the beginning of July saying that people are going to miss the speed with which this reprices. I mean, we saw palladium go from $500 to $2,800 an ounce in a couple of years, 2 to 3 years. But the pressure that's on this market for delivery of metal absolutely dwarfs anything that the palladium market historically had from the industrial users. And what it is a little corner of the bond market is waking up to the fact that the bond market has been destroyed by this government shutdown of the economy, and that they're running now to get a hold. I mean, even PIMCO, right? 2 weeks ago, PIMCO, which is the $1.7 trillion bond fund in the I think it's the biggest U.S. trader of bonds, came out and said that people needed to buy gold. I mean, there's your signal when the paper boys are saying buy metal. And I think that's exactly what's happening with those who are observing and who are even the least bit informed as to what is going on.
Well, I want to remind people what they've done to our money. I was doing a little research about this recently, and I'm going to go off memory here because I had planned to make a video about it. But in 1870, give or take a decade, a British pound equated to 240 pence of silver. Totally going off memory here. And I think that equated to 14.5 ounces of physical silver. Today, a British pound sterling is worth about $1.20. So you do the math on what they've done to our currency. And here's my question, David. In a world where we have a $2 trillion valuation on Apple and a 1.6 or 7 or $1.5 trillion valuation on Amazon, what do you think an ounce of silver might be worth in the future? Can you even venture a guess?
Well, I mean, it's very difficult to scale it in terms of currency because these currencies are, while we're trying to use them to scale value, is that they are on fire and they are degrading before our eyes. And so, I mean, even this microcap stocks, I think ultimately with this kind of Weimar monetary policy that we're seeing from the central banks are going to be worth trillions. So it doesn't much help to scale precious metals values today in currencies which are in collapse. But I do think that the time is coming, Sean, where you can buy a house for maybe 2, 3, 4, 5 ounces of gold. I think that's coming because all of these paper assets around us are burning down, and food, energy, fiber for producing clothing, precious metals, these are the strategic assets which ultimately hold value. And the first to really observe this, I think, was Peter Warburton. I remember reading his article, I think from 2000, in his book Debt and Delusion. And he was pointing out that you could control these derivatives markets with a few $100 billion and essentially keep everybody completely unaware of where the true value was in society. But the true value is in real things. And it's not in digital things. It's not in promises to pay debt with currency that is collapsing in value, and a debt market which is no longer being serviced correctly. We know 30% of U.S. mortgage holders did not make July 1st payment. So this stuff is in decline, in collapse, and so it's very difficult for me to give you a dollar number, Sean, because I think you could add 2 zeros and that would be low because of what is happening now to the value of our currencies. And there is a currency restructuring coming. There's going to be a new currency. It's going to be Fed coin in the States. And here in Canada, we have Project Jasper. They're all digital monetary systems where there's no longer any cash and everything's digital and held in the system. That's going to be the push. But I think just like the Corona scam is losing traction with people when they see that people aren't dropping dead of this stuff, and that there's very highly questionable counting of mortality, and that the mortality rate itself, even with these numbers with absolutely everything thrown, the kitchen sink thrown at them in terms of counting motorcycle deaths, if you want to call it that, that it's a little bit worse than the flu. I think that people are reaching their point of tipping to becoming highly skeptical of the stories that we're hearing now on a broad basis. And I think it'll be almost impossible to get people to hold digital currency because, of course, the central planners have collapsed our monetary system, and their solution for their collapse of their system is that we need more of their central planning in terms of a currency system that they're going to run digitally that nobody can get out of. And I think it's a pretty short equation to figure out the fact that that's probably not going to be well received, I think, by at least half the population.
Well, I hope you're right about that, but the problem is that now these governments have turned overtly tyrannical. So they don't care what people want or don't want. Look what's going on in Australia with hardcore lockdowns, where 2 men were just arrested for daring to organize a protest, and anybody caught outside without a mask gets a $200 fine. These totalitarians don't give a damn what we the people want. So I think if people find their backbone at some point, there are going to be civil wars in some of these countries because what they want is total tyranny. And if they turn us into serfs by destroying our money, it will be even harder to fight back.
Yeah, just a comment, a retort to that, or a comment on that, Sean, is that, you're talking about 0.1% of the population. I don't think the police or the military are going to all show up for this kind of a scenario. So there's got to be a reasoned solution. There's got to be a balanced solution, and it has to be one that reflects the will of the people. And I know Henry Kissinger said that if you create a big enough panic that people would welcome the UN to come in with open arms. But, in this age of communication, I think people are so far ahead of the curve here. I just don't see them welcoming these clowns with open arms at all, because they've been shown to be complete mismanagers, and they've been shown to operate a system which does not operate in the interests of the average person. So I just don't really see how you're going to get the cooperation that's needed. Of course, fear is the main tool, is to scare the daylights out of people. But I don't know. It's difficult for me to see, the best laid plans of mice and men. And I just think we're in one of these scenarios here where it's just not going to end well.
All right, final topic. I think this is important as we think about the meltdown and we think about all the paper assets out there. We've got the stock market with the valuations I mentioned with those tech companies. We've got the bond market. And then you know as well as I do that SLV and GLD and ETFs were created to quell the demand for physical. I've got the SLV called up here, which is controlled by JP Morgan. The value on this thing is $8.8 billion. All right? So right there we know $8.8 billion of demand for silver went into paper, right? Paper products. The World Gold Council just recently stated that gold ETFs recorded their 8th consecutive month of positive inflows, adding 21% in 2020 to a total of $9.7 billion in assets under management. Mm-hmm. What warnings do you have for those who use ETFs to gain exposure to silver and gold?
Well, I think you can trust those, speaking personally here, I can't give financial advice, but let me put it this way. I trust those vehicles as much as I trust the stewards of the financial system, as much as I trust the banks. So, I mean, they've basically run us off the edge, and, I'm not going to hold a share certificate in SLV over my head as a parachute on the way down.
Yeah, nor will I. I think we're at the tip of the spear here with one of the most important stories of our time. We've been at this for more than a decade. We've been talking about what they've done to our monetary system for more than a decade. People like G. Edward Griffin have been doing it far longer than I have. But I'm really glad and honored to be able to discuss this stuff with somebody as measured and intellectually honest about it as you are, David. So thank you very much for your time today. Do you want to tell people where they can find your work and how to follow you?
Sure. Real David Jensen on Twitter. I post my thoughts there, the things that I see that are important. I'm busy building a new company. I'm in, out of Vancouver now in northern British Columbia. But I'm keeping my eye on these things as we go ahead. And there goes a logging truck, by the way, right past where I am positioned.
I heard it. I know you pulled over to the side of the road for this interview. I appreciate it.
Yeah, no problem. But these are the end days of a multi-decade digital paper scam, digital/paper scam. And everything's getting very real, if you want to use that terminology. And I think the future is in real things, real companies with real assets, food production, energy production, getting out of the mega cities that have been built to contain people. And, I think that's the future, Sean, that we have coming here. And it's, in a way, it's going to be a much better future, but we've got a bit of a bumpy ride here to get back on the ground from this. We've been in orbit a long time with this scam system that's been run out of the Bank of England, out of London. And I'm looking forward to a more real future.
Well, you and me both, and I sure hope things work out the way that you're thinking they will. I do know this. It's going to end better. The future is going to be brighter for those who have physical, tangible assets like physical silver and gold and platinum than those who do not. Our guest has been David Jensen, at Real David Jensen on Twitter. David, thanks so much.
My pleasure, and thank you so much, Sean.
Yeah, my pleasure. Safe travels. And guys, thank you so much for tuning in. It means the world to me. A special thank you to our patrons who are quite literally keeping us in the fight for truth and real news, since YouTube not only shadow bans us, they demonetized the entire channel after 10 years of being a YouTube partner, claiming that my content is harmful. I think my content is harmful to the banksters in the New World Order, not we the people. And for real news, friends, visit us directly at SGTreport.com, the antidote to corporate propaganda. God bless. Bye-bye.
There's no way that a man-made reset is going to be deep enough or all-engulfing enough to work. And the second reset will be Mother Nature's reset.